Hey guys, welcome back. I hope you had a really great weekend. So, awesome news, I got my power turned back on after having no power for 4 days after Hurricane Milton. And I am so ready to trade again. Last week is a little bit fuzzy for me, as I'm sure it is for anyone in Florida, and that's okay because there are some very clear technicals to go over, and we did have CPI last Thursday and PPI on Friday, and I also did post these charts for Friday on TradingView. So if you're not subscribed to my TradingView, that link is going to be in the first comment. And sometimes when I can't make a video, which is rare, I try to make a video every night, but when I can't make a video, I almost always have the chart on TradingView. So one way or another, I try to get it out the night before. So then starting in SPY last week, we actually did open with a gap down, and we did start the week with a down day. And we took it down to our first support, which was right here. So we found support around 566 to start the week. Then Tuesday we gapped up. If you notice, the 35 EMA stayed above the 30-minute 200 moving average with that big move down. So when we gapped back up on Tuesday, we returned right back to being bullish, and we saw this 35 EMA as support. So this takes us into CPI. For CPI, it did come in hot, and we did trade back down to the 35 EMA. Then we saw that level as support heading into PPI, and this was Friday's trading range. This is what I posted on TradingView Thursday night. And on Friday, we opened with a push up all the way to the top of the implied move, and then from there we traded sideways. We made new all-time highs, and you could see that 580 was the top of the implied move. We closed just underneath that at 579.58, so we did manage to stay within the implied move. So then heading into inflation data, we couldn't quite get above all-time highs. We consolidated back to the 35 EMA. Then when we got the PPI, we did push up and make new all-time highs. And SPX, we saw the same move here on Friday. Previous all-time highs were a resistance to the penny right before CPI, and then with CPI we did come back down to the 35 EMA, and then we did see a bounce there to make new all-time highs after the PPI reading. We did take it all the way to the top of the implied move and still closed within the implied move. SPY did close up 0.60%. SPX closed up 0.61%. VIX closed down 2.34%, and in both SPY and SPX we did close within the implied move. So some pretty good strikes out on TradingView if you did happen to catch that on Thursday night. And then taking it over to QQQ. So we started the week in QQQ with a gap down, and we dropped down underneath the 35 EMA and underneath the 30-minute 200 moving average. And we have been seeing that 30-minute 200 moving average as a support level, and we did see that here as well. We got back above with that gap up on Tuesday. So we did not see a follow through to the downside, and we did reverse it. And then we did see the 35 EMA as a support. Heading into CPI, we did come up to this last bear gap right here. And Wednesday, we closed just underneath it. Then for CPI, we gapped down. We dropped down to the 35 EMA, but then again when we swung back up to the gap right here, and this is the gap that we made back in, I'm gonna say July. Let's zoom back out. I might have to switch time frames here. So that gap was right here. Yeah, July 16th, we gapped down, and we did see that as a resistance right here in late September. And we're right here, and last week we were really not able to push into that gap any further. So let me get a little bit closer again. That was the gap just under all-time highs, and that is right here. So CPI was right here. We dropped down to the 35 EMA, tried to get further into this gap, got pushed back down, and then for PPI we bounced on the 35 EMA, but again we really couldn't get into or above that bear gap. So still a pretty strong resistance. And this is the last bear gap between here and all-time highs. And if you look down to Stupid Willie here, you could see a bearish divergence. So we are losing strength as we approach this gap. And let me take it over to RSI for a second and see if we see the same divergence here. We do. So trying to get into this gap, we're seeing lower highs here in RSI. So strength is fading, and bulls might need to regroup before trying to take another swing at that gap. So QQQ did close up 0.16%, VXN closed down 1.31%, and we did stay completely within the implied move on Friday. And then IWM had a huge up day, and we did start the week right here with a gap down just like the other two, and we dropped. Then we did come back up, and we saw the 30-minute 200 moving average as a resistance. So when we crossed down right here, we saw the 35 EMA cross underneath the 30-minute 200 moving average, and then when we swung back up, that level was resistance. So we opened the week with the gap down and dropped. Then when we came back up, we saw that 30-minute 200 moving average as a resistance and got pushed back down. And then that took us to CPI, where we gapped down and we saw a bounce on the 50-day moving average. Remember, that 50-day moving average is pointing down, but just underneath that, we did also have the gap from mid-September right here. So that did give a little bit of extra strength to that 50-day moving average. We bounced on that level and got above the 1 hour 200 moving average to close Thursday. So CPI, we did see a drop in IWM, and remember, CPI did come in hot. And then for PPI, we saw a huge move up. We got above the top of the implied move, which was 219. We got above the 30-minute 200 moving average, which was previous resistance, and we got all the way up to this down gap right here that we opened right after. This was after Jerome Powell spoke after the rate cut. So absolutely huge up day in IWM. We took that 35 EMA all the way back up to the 30-minute 200 moving average, and this is a critical level now. If we see follow through with that 35 EMA up, then we would have regained a bullish setup. But if we get rejected here, we definitely could see lower, and that 50-day moving average still pointing down makes me think that we will see lower first. So definitely keep an eye on this level right here. IWM did close up 2.03%. That is almost twice the implied move for Friday, so huge day in IWM. RVX did close down 0.91%, and RVX is still very elevated at 26, and we did not close within the implied move on Friday. And lastly, DIA. We did open the week right here with a gap down and a drop. We did drop all the way down to where we have been seeing support, which is the top of the FOMC rate cut gap. So we started the week with that drop to support, and then we came back up. We got this 35 EMA underneath and back up. So we did find support here on the 30-minute 200 moving average. So heading into CPI, we did see the upper half of this trading range. So CPI right here, big move up and then consolidate back to the 35 EMA. And then for PPI, we saw a huge move up to the top of the implied move for the entire week. So the bottom of the implied move for the week was right here. We almost got to the bottom of that, and then we took it all the way to the top of the implied move. So we didn't waste any of the trading range in DIA, and we did make new all-time highs. DIA did close up 0.96%, and we did close within the implied move for the week. All right, so that was a recap of last week. I know I missed a lot of details, I'm sure I did, but if you've ever been in a hurricane, you know how disorienting it can be. A lot of the people I've been talking to lately had no idea that it was even the weekend. We're all a little confused down here, but I am back in full force, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. I had a ton of help while I was learning. And if I'm moving too fast and you don't understand something, let me know. And if you want to help support my channel, there's 2 easy ways you can do that. You can share this, or you can hit the thank you button, and that is underneath the video. Alright, so starting in SPY, tomorrow's implied move is between 576 and 583, and that is from options. The 30-day average volatility is about twice as wide, so we've definitely seen a volatility crush here. So 571 to 588, and then the implied move on Tuesday's contract is 574 to 585. And this is definitely not a very difficult trading range. To the upside, we are just underneath all-time highs, and if we push above that tomorrow, then the next target is 583. And then on Tuesday's contract, we're looking at 585. And then to the downside, we do have the 35 EMA, and we did see that as support for most of last week. We started the week with a drop underneath it, but then once we got back up, you could see we bounced right here, and then we came up, consolidated back to the 35 EMA, and bounced. So right now, 35 EMA is holding as support. And then if we do break that, 576 is the bottom of the implied move, 574 on Tuesday's contract, and the 30-minute 200 moving average is underneath that as well. We've seen every time we come up to the 30-minute 200 moving average lately, we have dropped underneath it, but then gotten right back up. And that was actually when the 35 EMA was close to it, but right here it was far away. And when we did touch the 30-minute 200 moving average, you could see that's right where we saw buying. So 30-minute 200 moving average is at the bottom of the trading range for tomorrow. So definitely not difficult. Within the implied move, the only 2 levels are all-time highs right here, and then the 35 EMA. And then in SPX, the implied move over here tomorrow is between 5780 and 5850, and that is from options. The 30-day average volatility, again twice as wide, 5730 to 5900, and on Tuesday's contract, 5765 to 5865. To the upside, we have all-time highs, which we made after bouncing on this 35 EMA and then pushing up after PPI. So 58.22.13 is where we have all-time highs right now. If we get above that, 58.50 is the top of the implied move and the next target, and 58.65 on Tuesday's contract. And lately, the strike that I have been choosing for my spreads has been looking at the next day's implied move, and then I'll go one underneath. So in this case, it would be 58.60 and 58.70 is the spread that I'm going to be looking for tomorrow. That has been working out really well for me, and that is definitely where I'm going to be looking tomorrow. And then to the downside, we have that 35 EMA right here. And then if we do break that, then 57.80 is the bottom of the implied move. 57.65 is the bottom of the implied move on Tuesday's contract. So here as well, if we do drop, then I'll be looking to 57.70 as the strike that I sell, and 57.60 as the strike that I buy. And then just underneath that, we have the 30-minute 200 moving average. So again, over here, not a difficult trading range for the next 2 days. And then taking a look at QQQ, the implied move for tomorrow is between 489 and 497, and that is from options. The 30-day average volatility is about twice as wide, 484 to 501, and then on Tuesday's contract, 488 to 499. To the upside, we do have this bear gap right here. We were barely able to push into it at all. Could see a little bit of a wick right here. But right now, this is a strong resistance level. We did make this down gap in July. Right here, we got into it a little bit, and then we got pushed back out. And last week, we did see this as a resistance. So 495, and then the top of that gap is just under 496. So 496 is resistance, 497 is the top of the implied move, and 499 is the top of the implied move on Tuesday's contract. This dashed line right here is all-time highs, so we're not too far away. It's not in tomorrow's trading range, but all-time highs are not far away from where we are right now. If we do collapse this gap right here, then all-time highs is a real target. And then just underneath us, we do have the 35 EMA. That was support for most of last week. The only time we dropped underneath it was right here on Monday, and then Tuesday, in preparation for CPI and PPI at the end of the week, we got back above that 35 EMA, and we did see it as support. If we break underneath it, and we definitely may, we are seeing a bearish divergence in Stupid Willie and in relative strength. So if we get underneath, the target for tomorrow would be 489, and on Tuesday's contract, 488. And then the 30-minute 200 moving average is just underneath the implied move for the next 2 days. And you could see that the 30-minute 200 moving average has been catching us after we found support on it and the top of the gap from the rate cut we had last month. So definitely this could be an interesting place to bounce, especially considering that the implied move for the next 2 days is above it. And if we break that, then the next support is really down here at 478. So if we do break that and you're looking out maybe into the next few days, 478 might be a good target. And then IWM, the implied move over here is between 219 and 224, and that is from options. The 30-day average volatility is between 214 and 225, and the implied move is 1% for tomorrow. The 30-day average is 1.88%. So definitely seeing some of the biggest moves in IWM. And then on Tuesday's contract, the implied move is 218 to 225. To the upside, the next level of resistance is going to be right here at 222.50. You could see we saw that as resistance right here. And then above that, 224 is the top of the implied move. And then 225 is the top of the implied move on Tuesday's contract. And you could see I have 225 right here, and then also 225 right here. So it's the way that I round. I always round up. So this is actually 224 and a quarter. And then we have this dashed line right here, which is the next level of resistance above that. And that is actually closer to the true 225. So 225 right here. So if you feel like this level will be a resistance, 225 might be a good strike for you. And then to the downside, we do have the 35 EMA, which is underneath the implied move. And a lot of times when the 35 EMA is underneath the implied move completely, then we do tend to see a down day or a flat day while it catches up. And then the 30-minute 200 moving average, and this is a critical level right here. Right here we got underneath it, and then we saw the 30-minute 200 moving average as resistance right here. But if we do pull this up and through, then we might start seeing this 30-minute 200 moving average as a support level. This would be a bullish cross up. So definitely an interesting level right here to look for. 219 is the bottom of the implied move, and 218 is the bottom of the implied move on Tuesday's contract. Underneath all of that, we have the 1 hour 200 moving average and this really strange 50-day moving average still pointing downward. That could pull us downward a bit. If you don't believe me, just watch. I've seen it so many times where we have this strange downward facing moving average and it just pulls us right back in until we can test this level enough to turn it back and have the momentum pointing up again. And then DIA, the implied move over here, and this is for the week because we only have weekly contracts here, is between 422 and 435. And as of right now, really easy trading range. We do have all-time highs. We close just underneath that. If we do get above that and see a support here between this and the 35 EMA, then for the end of the week, maybe 435 might be a good target. Definitely if we get towards the top and you're selling premium, then 435 would be a good one to sell. And then 35 EMA is just underneath us. We did see that as support last week. We did get above it, getting ready for CPI, then consolidated back to it. And then with PPI, we bounced up and made new all-time highs. So 35 EMA on the 30-minute time frame right now is acting as a support. But if we do break it, 30-minute 200 moving average is at the bottom of the trading range. And then that 422 would be an attractive buy level if we do find ourselves down and near the bottom. So there you have it, guys. Have fun tomorrow. Trade safe. Make sure you take profits when you're up. And I will see you guys tomorrow.